Yeah, I think that review there was quite positive. From our side, we have revenues down, profits down, EPS down, costs are pretty much the same. Admittedly, the investment bank is a little bit smaller than it was, for example, but it's still 50% of revenues, and ROE in the sector is only 1.1%. For the first 9 months of the year now, we have an ROE of, say, 1.7%. So it's very low from that department. And I think revenues, especially, we're down 15% in equities, 15% in fixed income. You know, that's against Wall Street. It's against some of the European peers as well. And that area is going to need a huge sea change over the next 3 to 4 years probably to bring that back. ROE ambitions for Deutsche Bank next year are only 4%. So it's still a long, long way to go.
Your point on the market side of down both 15% on equities and fixed income. We were just looking at Barclays numbers. Barclays actually up 15%. So it does tell you that some of the market share is being distributed. On the return on equity point, clearly they've got an issue here. Do you think the only way that they can start seeing an enhancement on the ROE side is by going down the consolidation route with another bank?
Well, it's very tough. There's two options, I suppose. They've said they're going to focus potentially back in Europe, but Germany is very, very difficult to make monies. It's the second worst profitability area in Europe after Italy, and to compete against the cooperative banks and the regional banks, Landesbanks, is very difficult, where Deutsche Bank would not have a competitive advantage on funding. It would actually be more expensive. And in the end, on the consolidation side, I suppose we have three items. We have this new CEO who's really prepared to get things done. We have the state rundown of Commerzbank. Politicians would most likely see that go domestically rather than external. And third, we have private equity. When your price to book, if, for example, a Deutsche Bank is 0.3, the urge to try and sell something and make some money. We have Cerebus, both with rather large stakes in Commerzbank and Deutsche Bank, which could help consolidation in that side.
Can I ask you then about the pathway for Deutsche Bank? Because there was a sort of view out there that we may be seeing a little bit of getting the house in order, ready for consolidation, given all the noises coming from Berlin, which have only grown louder, not to mention the funding cost wall that Deutsche is up against. The conditions have been pretty good for a number of years, and that can only get harder surely down the track. Do you think we are seeing a process now unfolding where consolidation is actually going to happen, say end of year or come 2019?
It's very tough on the Deutsche Bank side at the moment. As outside of Germany, there's not too many banks that can see the synergies at the moment with such revenue declines. The asset management arm is providing consistent returns, very strong ROE, but that's actually a part they decided to IPO a portion of it this time. And so it's very tough at the moment when there's such a regulatory focus on kind of going against investment banking. And I think Deutsche Bank now, for strategy, it'll be really important what they kind of see forward. And I suppose if we look back 10 years, the three largest banks in the world, RBS, Deutsche Bank and Barclays, we've had RBS decline asset size by 75%, Barclays is down 50%, and Deutsche Bank really is just catching up now to work out what it wishes to do in the future. And unfortunately, it doesn't really have a cash cow to rely on. It doesn't have that German market, which is producing very strong returns, to kind of give it a bit more breathing room.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.